Hey, what's going on? This is Leo. So let's talk about the Fed pivot. Let's look at some leading indicators here that could kind of give us a clue as to what they're going to do. So later on today, we're going to have ISM manufacturing data come out. So what this is a leading indicator that tells us, okay, our manufacturers, where all these goods that we purchase are made, are they increasing production or are they decreasing production? And so what we're seeing is we're actually seeing the manufacturing continue to decrease. We're manufacturing less and less goods because demand for those goods is decreasing. And now you're probably thinking, okay, well, wait a second, because inflation is still high. So what's going on there, Leo? Why is it that the demand is falling, but inflation is still up? Well, that's because inflation is sticky. Once it gets in the market, it's like, for example, if you're running a business and you're charging your customer $30 to mow the lawn, do you really want to go back to charging them $20? It's kind of that mentality. Once prices go up, it's difficult to get them back down. So really what this tells you is that whenever the ISM is above 50, that means that the economy is expanding, right? Because now that you have increasing demand, or at least constant demand for those goods. But if it falls below, that shows a decrease in the economy because you have demand for goods decreasing. So what we can do is we can compare this, right? Every time it falls below 50, we can compare that to historical points where the Fed has pivoted. So the first one I'm going to talk about is right here. We go back to 2019. So go look at the ISM chart. This would be 2019, right? So you can see how the ISM fell below 50, and what happened? The Fed pivoted. Okay, so let's go back a little further. We're going to go back to the 2008 financial crisis. So that would be here. ISM falls below 50, Fed pivots. So now let's go back a little further. So go back to the early 2000s. It'll be right here. So you can see ISM below 50. This chart that we're looking at here, this is the historical interest rates where you can see back here in the 70s, 80s, they were extremely high, and ever since then they've been in low. But every time that it drops here, what we're looking at is the Fed pivoting. They're beginning to lower the federal funds rate, the base interest rate for everything in the economy, right? So every time that this goes up, interests on mortgages, car loans, credit cards, all those interest rates go up because basically this is what the Fed charges, right? And then all these other lenders base their interest rates on what the federal funds rate is. So that's why it's important. So whenever the Fed raises the cost of money, it makes people think twice about buying that new shiny car or that new TV or whatnot that they're going to put on their credit card, because now it's more expensive. So kind of going back to why the ISM is important, it's because it's a leading indicator. It's showing us a fall in demand for goods, right? So even though prices are still high, we're seeing a falling demand. So going back to basic supply and demand within an economy, if your demand for something begins to fall, you wouldn't expect the prices to continue to rise. And we can see that in looking at the inflation charts and how, yes, inflation is still sticky, but it has come down slightly. So we're not seeing that dramatic increase in inflation anymore. It's more so very slowly coming down, which is a good thing. So we can come over here. We can look at, if you ever want to look at the economic calendars, all the economic events that are coming up that could affect the market. The red ones are essentially high impact events, things that if something unexpected comes out, that the market could get spooked and it kind of moves real quickly. That's why I don't trade around within 1 hour of high impact events. But if we look at what's coming on today, you can see that ISM manufacturing is going to be coming out here at 10 o'clock. And then tomorrow we have the federal funds rate's going to be released at 2 p.m. So it's going to have to keep an eye on that. Looks like the forecast is it's going to be 4%. So nothing too crazy there. They've already priced in a federal funds increase of 75 basis points. I think that's most likely. I don't think that because like I just said, the markets don't like unexpected news. So if they come out and they say, hey, we're going to raise it 100 basis points, it's kind of spooks the market. And if they come out and say, okay, well, we're only going to do it 50 basis points when 75 has already been based in, then that could be kind of moon boy territory. You could see a huge spike in risk on assets, which isn't what the Fed wants. They're wanting prices to stay down to try to cool off inflation. And if everything starts to increase in price, people feel more wealthy, so therefore they want to spend more money. To hell with the extra couple percent on my credit card. I'm going to go out and I'm going to buy such and such because I made X amount on paper on my retirement account type of thing. So what I'm going to be looking for going into the FOMC meeting is I'm going to be listening very carefully to what they're saying. Do they sound a little bit more hawkish? Do they sound a little bit more dovish? Does it sound like they're wanting to loosen the noose around the economy to ease off the interest rates increases? Or do they sound like, no, we're going to keep nailing this, we're going to keep hitting our hammer on the nail of inflation and just keep going and going and going? So that's kind of what I'm going to be looking for. Not so much for the 75 basis points, what I think is going to happen tomorrow, but more so for the December meeting. What's going to happen going forward? Are we going to have a 50 basis point increase in December and then we're done, and they're just going to hold interest rates to try to see if we can get inflation to come down? Or are they going to end up planning on a whole new, all right, so after that, we're going to do a quarter of an interest rate going into 2023. That's kind of going to set the tone for 2023 as to where the economy is going to be going. Currently, the odds of what economists are saying for the December meeting is they're kind of split down the middle. It's 50-50 as to whether it's going to be a 50 basis point increase or another 75 basis point, with, I believe it's a slight favor on the 50 basis points. But again, after tomorrow's meeting, and really even if we look at ISM today, and if ISM comes in at 48 or 47 or something quite a bit lower than 50, I would say that increases the likelihood that we see a 50 basis point hike in December as opposed to a 75, which, that's going to be good for risk on assets. So if you're holding things like Ethereum, Bitcoin, or tech stocks, you could see a nice rally as the Fed begins to pivot. Now, that's not necessarily the pivot, right? So if you look at essentially the way I see the pivot happening is it becomes first as a slowing of the rate of increase, because what they're not going to do is they're not going to go from 75 basis point increases and go to, okay, now we're going to cut 75 basis points. What's going to happen is they're going to slow, then they're going to pause, and they're going to let the interest rate sit high to try to fight off inflation for a while, and then they're going to start easing off. They're going to start making cuts. So it's a little bit of a process, right? So we're entering into what I believe is the first phase of the pivot, and then after that, there will be just stagnant higher inflation rates, and then eventually they come down. Sometime I believe, I would imagine in 2023, sometime they start to ease off quite a bit more. So I think that pretty much wraps it up here on the FOMC meeting update. I'm going to talk a little bit more about it once the meeting comes out. We have a little bit more information on where the economy is going to be going forward. But until next time, I'll talk to y'all soon.